call to order the East Lyme Board of Finance regular meeting for Wednesday, July 17th. First item or second item, pledge allegiance. Please all rise. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Delegations. Item 3 on the agenda is delegations, an opportunity for anyone in the audience or in the town to come forward and talk about anything that's on our agenda tonight. Delegations? No delegations. Thank you. Item 4, approval of regular meeting minutes from June 12th, 2019. Has everybody had an opportunity to familiarize themselves with the June 12th meeting minutes? And if so, does anybody have any edifications to make? We're all good? John?
Good.
Jason, good?
Yeah, I
Any?
wasn't there.
Bill?
I wasn't there.
Okay.
I'll abstain.
All right. Do I have a motion to approve?
So moved.
Have a motion, do I have a second?
I'll second.
Got a motion and a second. Any other conversations about the agenda? I mean, the meeting minutes? Sorry. All right. All in favor say aye.
All right.
Aye.
Opposed? Abstained?
Yes. Yay.
So
Abstained.
moved.
Me too.
Also abstained. 3-2-0. 302. All right. Thank you. Next item on the agenda, new business, presentation of the June 30th audit. Mr. Scott Sack.
Okay.
Hi.
Good evening. For the record, my name is Scott Bassett. I'm a partner with RSM, and we prepared the audit for the town of East Lyme for the year ended June 30th, 2018. What I thought I'd do tonight is I'll go through some of my required communications, talk about some of the findings that we had. So those are a lot of items that usually have some discussion. And then just go through the financial highlights of the reports instead of going through the booklets page by page. I think it'd be just more efficient to do that, if that's okay.
That's fine.
Perfect. Okay, so my required communications have to do with what we're hired to do, how we executed our charge, which is given to us by the Board of Finance, and from there what the financial results were, if there were any type of obstacles or things of that nature that would held us up or precluded us from giving an unqualified opinion. So to start off, we were hired to do the audit of the town, and plus all the audits of the federal and state grants that were received by the town. In all 3 instances, the town received an unmodified clean opinion, the type of opinion that you've received in the past. We issued our report in May of this year, which was later than we had hoped, and had to do with many things, just getting the records together and this and that. But we were out here in August and September and October going through the process. It gets into our busy season, we have to really stop when it gets into February and March and then come back. So we were out here during the fall, hit some delays. The state had some delays this year, actually. So we were able to get it together and issue it in May. The town did issue one new accounting standard this year. We talked about this last year. It was GASB statement number 75, and it had to do with your other post-employment benefits. Significant estimates are in the financial statements where we use actuaries and things of that nature to come up with the amounts that are reported. Those include things, risk management, OPEB accruals, pension accruals, allowance for doubtful accounts, and depreciable lives. We did have a small past adjustment for $6,000. Basically, the records come to us, and we look at it. If it's immaterial, we pass the adjustment instead of changing the financial statements as they go through. We also did have some adjusting entries to the trial balances that were given to us during the year, and we were able to post those entries to make sure your statements were in accordance with GAAP. With the internal controls, we had 4 or 5 management letter comments in the current year and 2 significant deficiencies within the current year, and I'll talk about those next. We don't know of any other consultations that the town had with other accountants as far as preferable accounting treatment or accounting standards. We had no disagreements with management, And everything, when we asked for, everybody was open, gave us what we needed, and provided the support and documentation that we needed to give a clean opinion on the financial statements for the year ended June 30th. We appreciate the help both by Anna's staff and Mary Anna's staff as we went through the process to pull this together. During the year, we did hit some bumps as far as we talk about management comments and significant deficiencies. Just to give you an idea, there'd be a material weakness would be the worst kind of finding we would have. Significant deficiency would be second, and the management comment would be third. So you had 2 significant deficiencies in five management comments in the current year. The significant deficiencies themselves were actually repeats from last year. One has to do with journal entries being made to the trial balances, what I had talked about basically. So when we come into audit, we go through those trial balances to make sure that they're presented in accordance with generally accepted accounting principles and with generally accepted auditing standards. And as we received those trial balances, there was various adjustments that had to be made by the external auditors. I don't think there's quite as many as in 2017, but there were some items that we had to go through and pull together as we went through that process. The second one is because the town does receive federal monies, that report is required to be filed by the following March 30th of each year, so it'll be March 30th, 2019. That report was filed in May of 2019. So those are the 2 significant items that we found. If the journal entries were so significant that we felt they would be material, they would have been a material weakness. The second one, I would say, just meets the criteria of a significant deficiency, but the trial balance ones and the journal entry ones are the ones that I would say is the most significant and serious one that we look at as your auditors. The management comments themselves, what happens with the management comment, basically, the town provides us with policies and procedures that they follow for the processing of certain transactions as we go through the audit. So we test your controls based on those processes and policies that you have in place. And as we went through there are a couple that I consider these insignificant, but something that really, if you have a policy, the procedure to follow. The procedure should follow that policy. One had to do with invoices being dated prior to the purchase order date. So basically, you have a purchase order system in here. Basically, a purchase order system protects your budgetary counting. But in several instances, when we went to look at the transaction based on our sample that we pulled, the invoice date was prior to the purchase date. So the proper order would be purchase order, then invoice date. So we did find several of those as we tested your cash disbursements. Now, the big items, the procurement items, your capital project items, we go through those quite in detail, and these items that relate to these are the not routine type, maybe hardware store items that sometimes there's an issue that you have to do that. So my suggestion when I see this comment sometimes is maybe it shouldn't be a blanket policy with purchase orders, but maybe there should be several exceptions as you write that policy. So to me, this is more of a review of a policy rather than making it more user-friendly as you go through the process. So for that one, that'd be my suggestion. This town receives low SIP money, and when you receive the low SIP money, you have to file a report. That report wasn't filed timely with the state. It didn't have any impact on the revenue that you received, but there's a compliance requirement that if you receive that low SIP money from the state of Connecticut, a report has to be filed a few months after that. So when we looked at our compliance work, the report wasn't filed, and we had to make sure that the town put some procedures in to get that filed after the fact. Expense cutoff, this is where you have expenses that may be dated June 28th. The invoice comes in July. It goes to the next fiscal year, but the services were rendered prior to June 30th, so those services should be posted to the June 30th year end. So that was, we cut our cutoff testing. Our job as your auditors, one of the risks that we have is we search for unrecorded liabilities. You know, we want to make sure everything that's recorded to each proper year, and that's one of the tests we go through. Although insignificant and immaterial, there's just a policy, a good accounting practice is look at the invoice date and make sure that you post to when the services were rendered. The next one was at the Board of Ed. There's a student activity manual there over at the Board of Ed. And student activities are the out at separate schools, can be used for various functions, whether it be field trips, athletic events, things of that nature. In a couple instances, so what we do, we rotate as we go through the schools, the policies that the Board of Ed has, we take a look at. If those aren't followed, we then report those. So there's a couple instances where those policies were not being followed as we went through that testing. And then the last item from a management letter comment was time card approval. Supervisors should approve all time cards. In some of the testing that we did over at the Board of Ed, there was a couple instances where they were approved after the fact and not prior to the fact. Again, not material, but the policy and procedure is there to make sure that that would happen. So that's kind of the testing when we go through our control testing. We're really checking your policies in adherence with those policies. So those are our main comments, and I'll just pause there and have you ask questions about any of those. Either Anna or Marietta can help me too as we go through the process, but those are some other findings that we had as we went through the process before we get into the financial results.
Can you give a little more detail on the Board of Ed student activity?
Yeah, so the student activity basically is if there might be department head approval that needs an approval before you go ahead and let it check out of the student activities, and that approval might have been done after the fact instead of prior to the fact before it being issued. So, and that's a good control because, student activity accounts in their nature, there's just less control there and more risk, just because money's coming from everywhere. They're different checking accounts. So the Board of Ed does have a policy. And my suggestion always with student activity manuals is there's re-education every year. Say, here's the policies that you follow. And it's more training. And I think, so I always suggest have that training every year with the principals and the administrators that are helping them, process this. So it's more education in nature. But there is risk there, although it would never be material to your audit because there's just not enough money there. It's just an inherent risk that are associated with those types of funds.
Okay, thank you. Okay. Anybody else have questions for what we've heard so far?
Okay, great.
Questions for Mr. Bassett or for
Yes.
the finance director or everything in general or?
For the part of the audit that we've heard to date, are there
Okay.
any questions about the material presented today or so far? We'll get
I-
into bigger picture conversations towards the end of the audit.
Okay. Just a quick question. It's a little surprising to me that there would be cutoff date violation, so to speak,
Yeah.
because we don't close the books until a year after. So has there been a policy put in place to ensure that if the books close on June 30th, that maybe we go back and we check by, say, July 30th to make sure that that's not happening?
I can have Anna answer that question because we come in after the fact, but
So, I can, I will say that comment was primarily related to our water operations, and so.
Water and sewer? I'm sorry.
Water and sewer each have separate
Okay.
budgets, and this was primarily related to the water operations budget. And so, as a result, I've worked, Joe and I have worked hard on this, and in terms of what Mr. Bassett has said, educating and re-educating the staff that are involved with these issues. So what was happening here is, and I also now review all of the water and sewer accounts payable registers. I wasn't in the distribution previously, so now I do, and I've been reviewing them. So far, everything that I'm seeing are all being dated and recorded properly. The employees now understand that if an invoice comes in that they don't have a purchase order for, that goods or services were received on or before June 30th, that those expenses need to be charged to the fiscal year that ended within that period. So it's been, we've worked hard at, really working with the employees that are, in the trenches doing doing that day-to-day detailed work to get them to understand that. And we are checking, looking at that much closer.
Okay. And so I might have some follow-up questions for you, Anna, when it's an appropriate time. But for Mr. Bassett, I have one more question.
Sure.
You indicated that the adjustments to the trial balance were, I don't want to put words in your mouth, but did you say minor in nature?
I'd say significant. There was significant deficiency in the aggregate, yes.
But not large enough to be categorized as a material weakness?
Yes, yeah.
Okay, so would you say that this is a fairly common occurrence in a municipal budget? And were the dollar figures involved with those adjustments to the trial balance less than, the same, more than other municipal budgets that you audit?
I would say, to answer your first question, I would say it's a common occurrence, okay? So it's something that, basically it's the books and records and how they're presented, right? So I would say it's a common occurrence. We do have adjusting entries, but, I do 25 municipalities, I can just use round numbers. If there are significant deficiencies in 4 or 5 of those, you probably would see journal entries there sometime, but I would say it's not common. So the whole idea, basically, as trial balances are given to us as your external auditor, is that they're ready for financial statement presentation. So when we see a number that, and I don't get too excited if they're a type of non-routine type of entry, where maybe there's some specific guidance is needed as we go through the process. But if they're more of a routine nature, sometimes like a cutoff entry or things of that nature, we kind of look at it and say, okay, and what could be the risk there? And everything's based on risk as we go through the process. It's not always just dollars, there's risk associated with it. So I would say the town is getting better at that. I think there were as many entries to say, several years ago, there was entries to cash, reconciling cash, just come with bank reconciliation processes. Those have been eliminated, so we've stepped those up. There's some entries that have to do with capital assets that, are a natural byproduct of your day-to-day accounting because it's on a separate module, and just because of modified accrual basis of accounting, there's just some catch-up work to do there. But, it's something that, you'd want. Anna's put a corrective action plan together for that type of that finding. But, yeah, we don't like to see that, to answer your question. So it's not as common or a current theme in a lot of municipalities.
Okay, thank you for that. Oh, one final question. Mr. Bassett, a lot of these findings have been recurring for many, many years.
Yep.
At some point, does that escalate your concerns if they keep showing up year after year?
Well,
or do you feel comfortable?
Well, I mean, I think it's always a risk. Like, basically, to go through our process, we look at the findings from the prior year, and we do our risk assessment, okay? So based on our risk, we'll say, well, here's the finding. So I'm going to make sure, I'm going to look at if there was a finding last year, well, my risk is to make sure you look for that again this year as we go with the process.
Right.
I do think both of those deficiencies probably go hand in hand, because if there's time if the system's generating clean trial balances, then the timeliness of the audit moves up, right? And we get rid of the second one quite easily because we're going to the first one's taking care of itself, and the conditions of the records are much better. So is it a concern? I'd say, I do think issuing the report in May is something that, we talked a little bit about last year. We made a lot of efforts to do that, but that would be a concern because, and now the financial information could be getting stale. And so I would think that you'd want to, at the latest, December 31st has to be a deadline, okay? A couple of things that did happen last year that did delay. The state put some reports out, typically coming out in October, came out in mid-December, which slowed some things up. But I think the process on that, and really to this board, is as we jump into the 2019-2020 audit, is I'd be happy to come back and give you an update during the process, just to make sure that we're going along and there's no surprises. But the length from June 30, 2018 to May would be something of a concern that we certainly can improve upon. And so that would be my suggestion. And I think how we can improve on it, just maybe October 15th, November 1st, saying where are we? And just having a brief 10-minute discussion with you, whether via phone or at a presentation, just so there isn't a surprise. And I'd be happy to do that.
So I had a
Okay,
quick follow-up.
Thank you.
Quick follow-up on your answer. You said that if somebody submits an invoice prior to a PO, you make sure that the PO is written from the prior year?
That has to do with expense cutoff entries.
So do we, with our new purchasing policy, have invoices before we have purchase orders?
We are, that has really tightened up since we've formalized the purchasing policy.
Okay.
Everyone is getting much better at that.
Okay, and the software that you've been talking about to us for many, many years, is that gonna clean up some of these problems? As far as delayed reports and things like that, haven't you said in the past that,
Well, in terms of having a more efficient system, that should, help make things more efficient for us.
okay, thank you. Any other questions for what we've heard so far? Okay, sir, you may continue.
Okay, thank you. So I'm just going to hit some of the financial highlights, some of the big numbers. I mentioned that the town did receive a clean opinion, unmodified opinion. On a full accrual basis of accounting, the assets were greater than liabilities by $105 million. That's the type of accounting that is really just presented once a year at the time when we present the audit to you. On a modified accrual, which is how you do your budget and how things are presented when you talk about your unassigned fund balance, budget to actual type of reports, the town ended the year with a total fund balance of $6.9 million or $7 million. That was almost $1 million increase from the previous year. And of that $6.9 million, $4.7 million was your unassigned fund balance, the monies that were not put aside for any other uses than other being some people call it a rainy day reserve fund. It's really your unassigned fund balance. And that percentage was 4.7%. People will ask, what do you think about the size of a fund balance? They'll ask your auditor. It could if you hear GFOA, which is the governing body or for finance directors, they'll say anywhere between 5 and 15%. And that all depends on policy and what type of other assets you have as reserves and things. 4.7%, you're within their range. This is 2018. Not sure how 2018 came out, but you did increase from the previous year, which is important. There wasn't a whole lot of other material events during 2018. Were big purchases of schools and bonding, things of that nature. So it was a pretty quiet year within the other funds. The other item talk about is the internal service fund. Is your health insurance. Your experience in 2018 was not what you expected. Okay, claims were higher than expected, and that happens. And so that fund ended the year with a deficit fund balance and higher than an IBNR, which are incurred but not reported claims, higher than the previous year. I think we talked a little bit about that last year, but the trends in those funds are tough to call. Okay, I mean that's why they call it a risk-based fund, because you do assume some risk when you self-insure for things. So that's a fund, along with your general fund, is a fund to get a quarterly update as far as how are claims trending each year, and just is it appropriate. So I'd say, if I look at your statements and say, well, where would you take a look at? I would say the health insurance fund is the fund that the monitoring of it, just to make sure where you are, because it's no one's fault if the claims come in higher than expected, as long as you're following your consultant's advice and budgeting to what they're suggested. So take a look at that. Would be the place where I'd say, from a financial statement standpoint, is the fund that I think would probably need the closest monitoring. The pension fund was funded at 80% at the end of June 30, 2018. A U.S. average for a pension fund would be about 71%. So the plan remains well funded at an 80% level. And you're using a discount rate of 7% with that, and which has declined over the last couple of years. So you're using a 7% is a rate that we see often, and it's not an aggressive rate, I guess is what I'd like to say. It's right in line with what other municipalities are using here in the state of Connecticut. The big change in your financial statement was the implementation of this new other post-employment benefit standard. That liability, your other post-employment benefits liability that's measured by your actuaries, not by us, was about $8.5 million as of June 30th, 2018. So a significant number for future benefits to be paid to the retirees. Again, that's a different measurement in the current year. In coming into 2019, there aren't any really significant accounting standards that are going to impact the 2019 standard. But so in all, I would say keep an eye on that internal service fund, your medical health insurance fund. Your OPEB fund, there's been no money set aside for that fund, which is not an uncommon occurrence here in the state of Connecticut. So you're using a very low discount rate with that. The measurement of it is about 3.6, I think, is the discount rate for that fund.
I'm sorry, for which fund was that?
That's the other post-employment. So those are your retiree health benefits that are out there. And with the actuaries come in, they, just like they do with your pension plan, use mortality rates, health trend rates, and then they use a discount rate. So your pension plan, I mentioned your discount rate was 7% because you have assets that can earn and offset that. Where you have no assets, you take a bond fund, a rate of return on a bond fund, add some inflation to it, that comes out to about 3.7%, and then you use that. So the lower discount rate, the higher the liability. Basically, is the math at how that works. But 8.5 million. And the actuaries can talk about how all that's calculated and some of the things that go into that. What we do, we have our own internal actuaries that will go through and make sure that the assumptions are reasonable, are in our line with GAAP. So that's what the process that we go through. Then from an audit standpoint, we really look at your census data, the information that's given to the actuaries for them to measure this liability. But that number, that 8.5, it's been out there. It's been measured. It's just accounted for a different way in 2018, different than it was in 2017. So it was just more of an accounting standard. It wasn't anything that management did here, but basically just a new standard that was adopted by the GASB. And the hope and the goal is to get these issued much earlier. And I would think you could put me at the end of October, beginning of November to come back in and give you an update. I'd be happy to do that.
But do you have a general statement to make on that 8.5 million? It's just too new to understand what the rate value is, or?
The 8.5 million basically is based off your union contracts that have where your current and former employees have retirement benefits. And those, as we saw with the health trend rates, as health claims go up and health costs go up, that's going to impact that because that's the health trend rates are part of the actuary's calculation. So whether it's high, low, or different, I really can't comment on that. But your actuary might have some better data per participant and cost per participant. He probably has some better data than I would have on that.
Okay, thank you.
I have a general question. So the pension fund with a discount rate is 7%. So
Yeah.
do we have the cash value in an account someplace?
Yeah,
or
yeah, absolutely. You have a trust fund
Right.
within the city, or within the town. You went away from an annuity contract 6-7 years ago.
Okay.
And you were able to take advantage of the market. And so your assets in that fund right now, a second here. So at the end of 2018, you had about $24 million in that fund.
Okay.
Yeah.
So then how does the discount rate tie back into that fund? I mean,
So what they do is the first measurement is like we talked a little bit about what the pension folks are going to get for the retirement. The participants are going to get, right?
Right.
So they're going to get COLA, right?
Right.
So what the actuaries will then do is take the value. You have $24 million in this fund. So they're going to say that fund right now is projected to earn 7% a year.
Okay.
Just doing quick math. So they do
Right.
7%,
Right.
and how that paces against what your employee benefit payments are going to be.
Okay.
They put the two together, and they bring the liability back as of June 30th. They discount it back,
Right.
and then they measure against the assets, and that's what the liability is. And so on
I
that
see.
OPEB
Yeah.
plan, they just have to calculate the liability, and there's no assets to help offset that.
Right,
So
right, okay.
that's the difference.
That makes sense. Thank you.
You're welcome.
Were you done with your presentation?
Yes, sir.
Oh, okay. So now we can get into the big picture questions. So did you have any other questions?
No, that was it. Pretty.
Okay. Ann?
No, I don't have any questions.
Camille?
I'm all set.
John?
I'm all set, sir.
Okay. Thank you.
Oh, thank you. Have a nice evening. Thank you.
Thank you, you
Okay.
too.
So here are another comments. Have a discussion about accepting the audit as presented. Does anybody have any more comments they want to discuss about the presentation before I request a motion? Here are none. Do I have a motion to accept the audit as presented?
So moved.
I have a motion. Do I have a second to accept the 6/30/18 audit?
Second.
I have a motion and a second. Any other conversations? Here are none. All in favor say aye.
Aye.
Opposed? Abstained? So moved. 5-0-0. Item 5C, special appropriation 2019-2020 CIP acquisition, $1,126,992. Special appropriation lease purchase. Yes. Special appropriation lease purchase agreement acquisition program. Does everybody have that material?
Yes.
Okay.
Here is all the stuff here. So this is our annual appropriation lease purchase agreement, grouping of town equipment and capital items that would include water and sewer items, Board of Education items as well. You'll see them listed in your packet in the back. We went through these in the past with you during the budget season, as all of this information was from the capital plan that was approved. Are you still here? No. Yeah, as I mentioned, there is a list. We talked about that roll-off truck. We talked about, to save miles on our garbage trucks. This is an inventive way to try to stretch out our assets, buying more inexpensive items to move up and down the highway. We're also looking at these vehicles that are Ford Escapes. And the Board of Ed, I think, is that in this one or is that in another one? That's in another one that's coming up later. So utility trucks, water trucks, fire marshal's truck, they're all in here. And these were all in your capital plan.
So I'll just comment, in the acquisition plan, in the past, we've done like several motions. We've done one for the town, one for the Board of Ed, and one for